Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the ultimate triangle chart pattern trading strategy. You would learn about the ascending, descending, and symmetric triangles and how to execute them in your trading journey. So stay tuned until the end of this video to master these essential patterns and to enhance your market analysis skills. Now we start by understanding the triangle chart pattern in our trading strategy. Now the triangle chart pattern are formed when price consolidates within two converging trend lines, creating a triangular shape on the chart. This pattern represents indecision in the market where buyers and sellers are battling to take control. There are three main types of triangle. We have the ascending triangle, we have the descending triangle, and the and we have the symmetric triangle. Each has a unique characteristics that signal potential future price movement. Now the ascending triangle features a horizontal resistance area. It it signifies a horizontal resistance area in chart at the top or the rising support line at the bottom. This pattern indicates that buyers are gaining strength as they push price higher, forming higher lows. It forms higher lows while sellers maintain the resistance at the same level, but eventually buying pressure builds up enough for it to break through the resistance. It is exactly what we are talking about. While the descending triangle, let's look for an example first of the ascending triangle. So a typical example of our ascending triangle, remember it features a horizontal resistance. By marking this horizontal resistance, we can see that price was finding it difficult to break through this area in time. This was the resistance area that price was making it difficult to break through. Then we indicated that buyers were gaining strength by making a series of higher lows, higher lows, higher lows, higher lows. This forms our ascending triangle. Now let's see if we can draw this triangle in a clear way for us to understand what this triangle is all about. Now by drawing this to our triangular tool, we can better spot this ascending triangle. And as we can see, this is the triangular pattern on our chart. This is the triangular pattern on our chart. Price respecting these levels, and it forms the ascending triangle before price eventually breaks out to the upside and continues in the existing trend. Now we are talking about the descending triangle, which is the opposite of the ascending triangle. And this descending triangle has to be a horizontal support line. It has to have a horizontal support line. As we can see, a horizontal support line where price was finding it difficult to break that area. Price reacted from this area but could not break, went up, reacted from this area. It had a fake break in, but you would know that price wasn't ready to break out. Went back to the upside, retested this area several times before eventually breaking. While it was retesting this area, price was making a series of lower highs, indicating that sellers were increasing the domination by making series of lower highs before eventually price broke out through the support line. And if we draw our triangle, you would see that this forms a descending triangle. This is exactly the formation of the descending triangle. Before we broke out to the downside. Now Remember, buyers attempted to hold their grounds at the support area before it broke out to the downside. Do not forget all these key points. Now let's talk about the symmetric triangle. The symmetric triangle is basically formed when other two patterns, neither the buyers nor the sellers, are dominant, meaning both trend lines converge as price forms a lower high and a higher low. As we can see in price here, price was forming a lower high, a lower high, a lower low in this area, and at the same time was forming a higher low, a higher low, a higher low in this area. This is typically an example of a symmetric triangle. If you converge the trend lines, you can see they both meet at one point, causing it to form this triangular pattern. This signals a balance of power between the bulls and the bears. The symmetric triangle can often lead to either continuation or reversal depending on which side of the triangle the price breaks out from. It can either break out from the upside or the downside depending. Remember, these patterns are not just shapes, they reflect market psychology. Ascending triangle shows increasing optimistic among buyers. The descending triangles reveal growing pessimistic among sellers, while the symmetric triangle display uncertainty in the market sentiment. Now let's draw this symmetric triangle in such a way we would better understand it with our triangular tool. And as we can see, we have drawn it clearly. This is an example of our symmetric triangle. Now let's see how we can apply the triangular chart pattern to our trading strategy. By applying the triangular chart pattern trading strategy, it requires a systematic approach to each type of triangle. Let's focus on a single and detailed strategy that works best for the ascending, the descending, and the symmetric triangle. The ascending triangle always look for a horizontal resistance, and we can see our horizontal resistance at the upside is a line and an upward sloping support line. This is the upward sloping support line. This pattern typically signals bullish continuation, and as we can see, it was in a bullish trend before it decided to form our ascending triangular pattern to continue the bullish momentum. So it always shows it always occur during a bullish trend. So we would enter a long position when price breaks out of the horizontal resistance area. We can enter immediately price and breaks out from the upward resistance area. This pattern typically signals bullish continuation, so you wait for the break above the resistance with increasing volume. As we notice, when it was breaking out, there was an increase in volume. If we look at the volume indicator, we found out that the volume was increasing while it was breaking out. So this is a signal that further validates our setup. So when there is an increase in volume, it further strengthens our bias. So when the candle breaks out and closes above the resistance, this is when you enter. You can also enter in a retest, but most times price refuse to retest the triangle before moving to the upside. Sometimes price just breaks above the triangle and keeps going up. So you enter your position at the close of the candle. When you enter it at the close of the candle, remember your stop loss placement is important. So you place your stop loss just below the last swing low. Remember, just below this last swing low within the triangle. When trading a descending triangle, now let's see how we can enter a trade using the descending triangular pattern. When trading a descending triangle, identify the horizontal support line and the downward slope resistance. This is our downward slope resistance, and this is our horizontal support line. Once we have identified this, the pattern often indicates a is always indicated in a bearish continuation trade. and you would have to enter the trade when price breaks below the support line. And as we can see in this area, price eventually broke below the support line and retested the support line. When price broke below and closed, you can decide to enter your trade at that area. Remember, stop loss is also important in any trading strategy you are using. You always put your stop loss to safeguard your capital. You place your stop loss above the last swing high in that area. You place it at the last swing high at that area within the triangle. This is how you enter. Then you project your trade to wherever you want to project it to, 1:2, 1:3, as the case may be. Now let's see how we can capitalize on a symmetric triangular pattern. Now symmetric triangular require extra caution as they can neither indicate continuation or reversal signals. This pattern have converging trend lines with lower highs and higher lows in both sides. There are both lower highs in the upside and higher lows in the downside. So how you trade this pattern, you wait for price to break out of either of the sides, either the upside or the downside. You enter your trade in the direction of the breakout when the candle closed beyond the trend line. So immediately candle has closed beyond the trend line, you enter your trade in that direction. You place your stop loss just above the recent area. If price breaks out from the downside, you place it above the last swing high. If price breaks out above the upside, you place it below the last swing low. Then you aim for your 1:1 or 1:2, as the case may be. Your profit target should be measured. You can measure your profit target by measuring the height of the triangle. You can always measure the height of the triangle to project your estimated take profit area. This is the height of the triangle. So when I measure the height of the triangle, I can project this to my entry area and aim for where price should go to and set my take profit to that area. And we can see this is a solid 1:2, and as we can see, eventually price got to that area. So you can do this for both your ascending, your descending, and your symmetric triangle. This is how you can calculate the profit, by projecting the distance from the breakout. This method is a reasonable estimate of potential price movement. As you apply this strategy, always adhere to proper risk management. Never risk more than 1% or 2% of your trading capital on a single trade. This approach will help you protect your capital and ensure long-term trading success. Alright traders, we have come to the end of this video. If you found this video helpful, do not forget to like, share and subscribe, and turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. You can also engage with us in the comments below because we want to hear about your experiences. So thank you for watching, and I will see you in the next video.